most of your instincts are going to go against profitable trading. That's the thing we have to keep in mind as traders.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, I thought we could talk about some trading psychology myths. What are some popular things that people believe that are not true?
Well, the biggest one is if you use a robot, like a trading expert advisor or an automated system that does the trading for you, that you remove emotion from the equation. That's my favorite one.
That's a
actually.
big one. Yeah.
Yeah. So you know what I mean? So what are your thoughts on that? I mean, I always say, like, you basically, when you have automated strategies, you play God because you turn them on and off. You kill them and you ramp them up or whatever. You move them off of demo to live. So you still have to go through all the same stuff you do when you're a discretionary trader. It's just a different type of babysitting. That's all. So what are your thoughts?
Yeah, I would add to that. A lot of people think that just because it's back tested, or they showed some back testing results on the EA website, that it's legit. And a lot of times, if you buy the EA and then they change the settings like every week, they send you an email, hey, change the settings. And that just shows that it wasn't, properly back tested. And then people start tweaking the settings on their own, right? And then even if it was a good EA, it totally goes to crap because there was nothing there. So, I mean, I think that's the biggest myth. I mean, it's the hardest thing to get your head around, I guess.
Yeah, I agree. Like like you said, what they'll do is they'll curve fit for the ad, and the ad is curve fit. It shows you, the best possible scenario for that system, and you can do that to yourself too. If you don't have in sample data and out of sample data, so you want to sort of design your strategy on a set of data, and then you have a different set of data where you see how it goes. You don't want to see how it goes and develop your strategy in the same set of data, right? Because that's bad. That's curve fitting. And the other thing is the walk forward. So like let's say you had like a 5-year period that you didn't use when you developed your strategy, and so you might walk forward like 2 years at a time, and you keep running these walk forward tests with certain blocks of data that you didn't use to develop your strategy, and you want to see how does it go, how does it look. Basically what you're trying to see is what does it do in different types of markets. So yeah, I mean, I know we weren't supposed to talk about that, automated system design and construction, but because it's such a big one, I mean, everyone thinks they start trading, they have problems, they can't make it work, and they go, oh, I'll just get an automated system and then everything will be fine. It doesn't work that way, unfortunately.
Yeah, no, that's the biggest pitfall, I guess, of those EAs and automated trading. So I guess you really do have to talk about the system itself or how it works, right?
Absolutely. Yeah.
For me, I would say that I think a lot of people think that you can do kind of like these Band-Aid psychology hacks or whatever, so-called hacks, and it will come out like you would get an instant result, like, oh, I'm over trading, so I'm going to do this hack, and I'm going to be over it in a week. In reality, there's probably some deeper stuff going on there, some stuff you have to really work on sometimes, and it's not a matter of, oh, you get this tip and then you can instantly translate that into better trading. So I think people have to understand that part of it is the trading strategy and getting that down, but then the other part is the psychology, and that could take longer than you think. It's not like an overnight weekend type of thing.
Yeah. I mean, there are different schools in psychology. Like there's the Freudian or humanistic schools where they, like if you go into therapy, it's kind of like like it happens over a process. It's like a long standing thing. And then there's like cognitive behavioral, which is kind of what you were hinting at, like where they say, and you'll hear sometimes on talk radio, you'll hear this sort of thing, or at least I did last time I listened to talk radio back in the US. Like you'll hear these doctors and they go, wait, what's going on? You're having problems with your husband? Okay, well, you got to stop thinking this way. This is what, tell yourself this, and then, you know what I mean? And it's exactly what you're saying. It's like the cognitive behavioral sort of idea is that your thinking leads to your action. So if you just switch that thinking and you can flip that around, then boom, your life is saved. Everything's going to be fine. And and so what you're basically what you're saying is like, for a lot of people it's not that simple, right? We're creatures of habit. If you think about all the ways that you could go home from your work or your friend's house or whatever, but you always kind of take the same route. Or if you walk someplace every week or every day, do you always walk the same way, or do you switch it up? I like to switch it up and make it like go out of my way just to for variation. I like that. But a lot of times we just do the same things over and over again out of habit. So yeah, it's tricky. It is tricky to break those, especially if they're deep seated. Like, people will tell you can't go broke taking a profit. Well, what are your thoughts about that?
It just depends, right? Like if you're one of those like scalper types, or you're doing more like short term, trying to take advantage of this little window of opportunity that you see, then yeah, it's fine. But I think with the majority of strategies, I think you really do have to let the odds play out and go for that. If you're targeting something, then hit or honor that target, and not try and get out earlier just because you have a profit. What do you think?
Yeah. No, yeah, I mean it's right. So you can take lots of profits, quick profits, and as long as you have a really high win rate, then you'll be fine. But generally speaking, that's the hardest way to make it work. In other words, if people were more comfortable, I believe, if traders get more comfortable losing, and therefore waiting for the bigger winners to show up and bag those bigger winners. I mean, psychologically, it's very difficult because you just want that win, right? You just want that money. It's sitting there. But, the math behind the lower win rate, high reward risk ratio strategy means that you kind of have a little bit, usually you'll have a little bit fatter cushion, so that, if things go a little bit wrong, you don't get in your trades exactly right or whatever, you'll still be on the positive side, right? Whereas it's the opposite when you're taking these quick profits and you have to maintain a high win rate. So like I've been trading Bitcoin against USDT on the 1 minute chart of the last month. And, most of those trades, if it's profitable, it's between, 300 and $1,000, right? So it's kind of in and out. But, if it gaps, like if it goes against you really quickly, you're gonna lose more than where your stop was at, right? And that's happened to me. It's happened to me once, right, in this time. But that's the thing, like that one time can really wipe you out if your profits you're taking are too small, right? So like, let's say for example, I'm risking $600 and I keep making $400, $400, 450, 500, and I'm risking $600 each time, right? And then that one time the market goes against me and I lose $1,800. So what's that done to my, do you know what I mean? What's that done to my week? Am I down on the week now because of that? Am I down on the month? Like, that's the thing. This idea that you can't go broke taking a profit, it really kind of depends on the math, I think.
Yeah, I think it only really applies to a small number of trading strategies, right?
Yeah, that's right. That's right. And even one of the guys in the Market Wizards, he was saying, he goes, theoretically, in his interview with Jack Schwager, he said, theoretically, I would have made many, many, many more times the amount of profit that I've made, but I just love to hear the cash register ring. And it was an admission by him that he was taking profits too quickly. And he knew that he was still profitable, but if he had just waited a little bit more and maybe had more losers, but some larger winners, he would have made a lot more. And he understood that. He understood the math in his head. And that's basically what I'm saying, is that, most of your instincts are going to go against profitable trading. That's the thing we have to keep in mind as traders, that, like you're saying, it's a lot of hard work to go against the grain and against those instincts. Most of the time, you're going to, and you can just look up, like go to the internet and just look up cognitive biases. All of those cognitive biases are what lead to losing trading. Not all, but, many of those are going to work against you as a trader. So it's important to understand, have a plan. Like, what am I going to do? How, if this is something that I recognize that, I do this on, you look at the 25, 30 cognitive biases, you go, okay, these 3 are the ones that I have problems with. So what are you going to do about it? Right? Like, you got to have a plan.
Yeah, totally. Any other myths you can think of?
I mean, there's tons. Probably the need to win is pretty common among newbie traders. Like,
That's a good
and
one.
you'll hear people say that. Well, as long as you win more often than you lose. Well, really, really? Because I can show you like 15 systems right now that you will lose money on, and they have better than a 50% win rate. I mean, it's true. It's easy to show that. So yeah. So I mean, it's just you just have to work through it. It's like you said, like we've been talking for years, right? And one of the things I've noticed is that it's the traders who are stubborn and don't give up that actually get to the other side of consistency and profits. And so in a lot of ways, it's like, how much are you willing to put yourself through so that you can get to the other side? Some people just give up. Like they say that in, I know this is probably funny to even bring this up, but in Navy SEALs, in the Navy SEALs training or whatever, like however they sort out who's going to become a Navy SEAL, whatever that training is, the preliminary stuff. They say that the guys that usually make it are the guys that have nothing. It's not like someone who's like a third generation Navy SEAL that makes through the training. It's some guy that has nothing going on in his life. It's like he's either doing this or he's going to clean carpets. You know what I mean? Like he's got nothing going. He's not going to be a lawyer. He's not going to be a doctor, but damn it, he's going to get through this Navy. And so they have the mental toughness because it's like, they know, look, if I don't make it as a Navy SEAL, I'm roofing. I'm going to be up there in 120-degree weather on the top of a roof every day, and that's hard work. I'd rather do this. You know what I mean? I'd rather be in the Navy. So yeah, it's kind of that sort of thing with trading. I think the guys who stick with it are the ones that end up making it to the other side.
Yeah, it does take a lot of perseverance, for most people at least. Some people catch on pretty quickly, but
yeah, not me.
Same here. Yeah. Okay, cool. Thanks, Walter.
All right, thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.